Hello there, this is James, and you're watching Tixee Live. Now, in this video, we have a fair bit to cover, because following on from my morning session, where I spoke to good people earlier on, quite a fair few things have happened. We are still dominated by the story I opened the morning's broadcast with. We're still dominated by that, and we'll talk a little bit more about that. But there's a couple other things we should discuss. But before we do that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own diligence. There we go, said it. And of course, be aware of the risks at hand before entering any trade. With that out of the way, let's get cracking. So, what is the main story dominating the markets? And it is still Snapchat. It is still Snapchat. As those of you who joined me this morning when we first discussed this story, and I will show you the statement made by the CEO in a minute, what was said. Basically, the market is gripped by fear by what the statement is, and I'll explain to you the reasons why in a little bit. But when I was last on there, the stock price for Snapchat had dropped by 28%. It's now hovering around 33% before negative 30, down 33%, sorry, before pre-market. So what has actually happened? Just do a recap. Well, basically, in a nutshell, the CEO yesterday, in a memo to his workforce, his staff, Mr. Even Spiegel, he said macro environments has deteriorated further and faster than we anticipated when we issued our quarterly guidance last month. As a result, while our revenue continues to grow year over year, it is growing more slowly than we expected at this time. So here's the thing. This is the thing which is fascinating. Okay, because obviously these aren't the earnings. Okay, it's not like what happened last week with Target and Walmart, which published their earnings and it was dramatically lower than anticipated, which then put fear into the market. This is a CEO warning as a head that earnings from Snapchat may not be so good, and the earnings is not due to July the 20th. So what is the problem with the earnings? Why are they worried about the earnings? Well, simple. He also mentioned that due to inflation, the war in Ukraine, supply issues, all this is affecting ad revenue. Okay, so now the market is having a look at this. This is not the earnings. This is a warning of what we might expect in July. So the market is sort of panicking that, obviously, because of what's going on, a lot of these social media companies who have stocks traded are going to get under pressure, because all of them practically rely on ad revenue. And I was thinking about this as well. I mean, I'm old, I'm 44, okay, so I don't have a Snapchat. And I always thought Snapchat was for younger people, a bit more trendier than me. I don't even have a Facebook. But still, this has put the market into a little bit of a concern that if Snapchat is facing this issue, clearly the likes of Twitter, Facebook, or Meta platforms, however you want to call it, and Google, you obviously own YouTube, could face a big problem. Could face a big problem too. And don't forget, the way we take our information nowadays is very different. We do take a lot of our information to social media. These are absolutely huge. Bear in mind that, I mean, I'm talking to you now through YouTube and Facebook. So this is how we take our information now. It's very, very, very different. So this is the big concern. So let's have a quick look at some of the, let's have a quick look at where's Google at the moment before the pre-market. Okay, so this is Google. Obviously, with this news breaking, it's slightly in the red. Okay, but this will be incredibly interesting to watch come the US Open. I'll be very fascinated by seeing this. At the same time, let's have a quick look at Twitter. Twitter, we know we've covered in this program already quite a few times, certainly about the Musk argument with the CEO and Musk backing out the deal. That hasn't helped Twitter's share price at all, but Twitter is going to be something interesting to look at. And then, of course, obviously, we've got Meta platform, okay, or is it Meta? Facebook, basically. Facebook's in the green currently, but it'd be interesting to see Facebook, how it stands come the US Open, see what the impact of this Snapchat story is and what we could see over the next couple of days. But interestingly enough, something else. Some analysts, and now this is pretty scary, some analysts are saying that social media stocks could erase as much as 100 billion of their combined value over the next couple of trading sessions. I'm not saying that they definitely are. This is analysts saying this is how big this story is. This is how the impact of this story could be on the likes of the tech companies. And obviously then pull NASDAQ as well. NASDAQ we need to watch. Don't forget, as I've said again this morning, NASDAQ is already trading 27% low, lost 25% of its value since January. So yeah, that's a big thing. Social media stocks could erase 100 billion of their combined value. So this story is going to take a lot of developments over the next couple of days, and it certainly would be worth keeping an eye on. And yeah, like I say, it amazed me that this is just a warning. It's not earnings. Earnings for Snapchat is not due to the 20th. Facebook is due on the 26th, and Google is also due on the 26th. So the next couple of trading sessions and the US Open could be really fascinating indeed. So anyway, enough about Snapchat. Okay, I've talked about it twice today, once this morning, again now. Let's move on to something else. Let's go on to the other story. Langard again is speaking. Don't forget, she's at Davos, I believe it is, the Economic Forum. She was interviewed, and basically in her words, she said, ECB is not in the panic mode to raise rates, even though she mentioned they were planning or hoping to get out of negative interest rates by September, which put the market into an optimistic move that the ECB will raise rates. She says she's not panic mode. She's not too worried about recession for the Eurozone currently as it stands, unlike, say, the worries of the US, UK, etc., and the rest of the global world. She said, no, they're not in panic mode quite yet, so they're not too worried, but there is still pretty much signs. I think she was trying to calm down her statement, but I'm pretty sure that the market is already buying into the fact that they will be raising interest rates to try and get them out the negative interest rates by September. They could just basically go to zero. So that would be negative. So then she's true to her word. So she could still do that. But it'd be interesting to see how this story develops. Euro-wise, let's bring the euro up, because euro, like I say, was having a good day. And it's still performing quite well. It's hovering around that level we've been watching for the last couple of sessions, 107.017. So it's still trading around that. On a 4-hour, can we see if it's broken it properly? It's still trading just above it. So it hasn't broken that key level of interest on that. So obviously the market is, as it stands, feeling still a teeny weeny bit more bullish towards the euro on the back of Langard's statement yesterday. And obviously, they're excited. So what else is happening? What else has happened today? Because like I say, since I spoke to you this morning, quite a fair bit has gone down. And another big thing happened. And it's a shame, actually. I went off air 10 minutes before this happened. I really wish I was still on air at that point, because it would have been really exciting to share it with you. But the British pound has slipped up quite dramatically, in fact. Quite dramatically. Remember, we've been watching the British pound over the last couple of programs, watching it trying to get to that key level above 125. It's now trading below that, because literally 10 minutes after I went off air, which is such a shame, but the UK announced its services PMI, and it was announced at 51.8 versus 57.3 expected. Now, this is the Purchasers Manager Index. It's a survey of purchasers managers to get their idea or their feeling of how the economy is performing, and what their purchases are and things of this nature to run their business. And 51.8 is quite a lot below the expectation. And actually last month, it was at 58.9. Now, here's the thing. Anything above 50, okay, is still considered positive. Anything below 50, then it's not positive. But the problem is, this is the lowest it's been since May 2020, okay? And at the same time, this is the fastest drop from where it was the month previous to the expectation. So remember, 58.3 down to 51.8. It's the fastest drop from that number, okay, since January 1998. And that was the year this survey was started to be used. So since the PMI, services PMIs existed, that's the fastest drop ever. Okay, so this is why it's pretty dramatic. Let's have a quick look at the euro. Not the euro, sorry, at the cable, because we've been watching the cable quite a fair bit. Bless it. Now remember, we were talking about this key level. We're watching this level for the last couple of programs, 125.49. It was trading just above it, trying to break through it. Once this news came out, it plummeted all the way down. Okay, so a 30-minute chart, plummeted all the way down, and it found a bit of support from that 200-day moving average. 200-day moving average. That was around 1.2470. Okay, it's currently trading now at 128.90. So that's pretty dramatic drop, and it's a shame because I say the sterling's been trying to get back to those levels pre-Bank of England base rate decision, but it's been weighing down. Now, the fact that PMI is quite dramatic, usually it's like a medium event, but today it had a big impact, as you can clearly see. So it's interesting to watch the level. Is that support 124.73 is still holding us to 200-day moving average, but really once again, we've got the challenge at 125.490. Right, but as they say, another man's sorrow is another man's gain. Okay, on the back of this and on Lingard, the euro sterling has jumped to a 7-day high. Let's have a quick look at that as well. This is on a 4-hour chart, so looking at the long term. Okay, now this big candle here, obviously, is when the news came out and the sterling started to feel the pressure, so to speak. Okay, it has this key level 0.85651, but it was a nice skyrocket. This is on the back, obviously, of sterling weakness because of the PMI, euro strength because of Lingard, and the ECB's expectation of interest rates being increased. But that was a good move on the euro sterling. So I'm keeping an eye on that level 0.85651. Anything else to look at the moment? Let's have a quick look at gold. Gold has had a pretty flat day, pretty ranging day, to be honest. Still trying to challenge that key level of 1,865.57 cents, and trading from the support of 1,834.87 cents. So no real change for gold there. So yeah, big dramatic day, especially for the sterling, euro sterling, and obviously this Snapchat talk, etc., is really dominating. So as it stands, the stock market before the US session opens in 15 minutes time. So it'll be interesting to see Google, Alphabet, Facebook, Twitter, how they react with the US Open, or whether or not the pre-drops are already priced in. So it's still interesting to see how they carry out. But for now, European stocks, FTSE plus 0.33%, DAX minus 0.77%, Eurostock 50 minus 0.65%. So that's how that stands on that. Things to come. Powell's speech tonight. Again, that would be really interesting to see because don't forget, last time he spoke, that Wall Street event, he scared the market again. So let's see how that was on the back of a good day when the market was optimistic, and then he scared everybody with his aggressive stance against inflation. He really is taking it personally. So it'll be interesting to see what he says. US durable goods, which is tomorrow. That's for long-term purchases like cars and things like that. So it'll be interesting to see that information come out. And obviously Lingard speaking again. I mean, at the moment, she's spoken a fair bit, and each time she has impacted on the market. So it's worth seeing that. Big one then, FOMC minutes and US GDP. Don't forget, US GDP, I will do a watch along. So I hope you can join me for that. If you ever have any questions, I think there's something here. If I have any questions, please feel free to ask me. I am here to help. You know what I mean? I am here to open a conversation, and if I know the answer, I obviously will try my best to answer it. On that note, I'll be going live again tomorrow, early in the morning, about, I think, what time is it? It's 11 a.m. my time, which I believe is 3 hours. That's 8. Is it 8, 8, 9, 10? Yeah, 8. My maths, surprisingly, I'm in investments. 8 a.m. UTC. And again, obviously, in the afternoon, doing the afternoon session, which again will be at 1 p.m. UTC. As there's no questions, don't forget, hopefully tune in with me tomorrow. And if you're watching me on Facebook and you like it, give us a follow. If you're watching me on YouTube, subscribe, hit the notification button. If you found this episode interesting, helpful, and hopefully a bit entertaining, give me one of those. Put a smile on my face for the end of the day. Should be nice. But anyway, hope to see you tomorrow. Till then, though, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.